Thank you. I was going to start off this session by saying we listened very attentively to it, and nobody mentioned the B word until Qian did. Because I was pretty confident we weren't going to be able to get to any questions without mentioning that. Now, obviously, you've already heard from Tomás and Qian, and this is now the opportunity for us to introduce Meg and Lee here, who you will see some background information in these leaflets here, but Meg's from Impax and Lee is from Baillie, Gifford. Now, part of the presentation is a very sort of general, rounded one, but one of the key areas that we want to be able to focus on this next session is the impact-focused element of what we're trying to do here. Now, both Meg and Lee, who will have a chance to tell you a bit more about their specific roles when I open it up to them, are heavily focused on that. So not only are they, in their companies, running impact-focused funds, they're also critically, from my point of view, making a profit from it, and they're able to depict the level of global and international interest in this area. So it would be useful, Meg, if you could just give the audience a wee bit of background about yourself, and also your kind of key takeouts from the presentations today, and then we'll turn to you, Lee, and then at that point we'll open it to the floor. Great.
Thank you, and thank you so much for inviting me. Impax is a boutique asset manager that is dedicated wholly to investing in companies that we think will provide really good returns for our clients because they are well positioned for a sustainable economy. So we think the economy is changing, and we don't want to put our clients' money into companies which are not going to thrive in that more sustainable economy. We don't think that's a good way to invest for financial returns. To identify companies that we think will thrive, we look for positive social and environmental returns alongside financial returns. So we're looking at it really as a complex when we look at a company. So we're looking for profitable companies that are well governed, that are liquid, available on stock markets globally, and we invest our clients' money, both institutional money and also private individuals' money that comes through their financial advisor in a positive way. Our company is not running separate funds for clients that want that, mainstream funds that clients haven't quite got there yet. We only do that, and we are possibly one of the fastest growing asset managers in the world at the moment. We've quadrupled in size in the last 4 years. I think we've just hit the point where our investment thesis that you can actually make really good returns for clients out of this style of investing has really come of age, and we're really, really excited about the client interest in that style of investing. In terms of what you've been talking about today, I mean, it's really exciting. We're not Scottish ourselves, but we do have a Scottish chairman, who really encouraged me to come today and support you. So we invest through stock exchanges where there's good corporate governance, good, but the background, really encouraging to hear this is, proper. It's not it's connected to normal markets, very normal in its back end, as it were, which is what we need. And as long as you get great companies that are profitable and are resilient to that change in the underlying economy, delivering solutions to provide a more sustainable economy, then we think that's a great place to invest. So really encouraged, really looking forward to it. We will use it if the companies that list meet our criteria for investment.
And that's already built in. Thank you for that, Meg. Lee.
Thank you. It's a great privilege to be here this morning and talk to you a bit about what I do. So I'm from Baillie Gifford, which is a local investment management company based here in Edinburgh. We've been operating for over 100 years now. It's owned 100% by the people who work at Baillie Gifford, by 44 partners at the moment. We focus on long-term investments. So when we invest in a company, we don't focus on their quarterly earnings or what's going to happen to their profit and loss over the next 12 months. But rather, we focus on companies that are well managed over the next 5, 10, 20 years. And we believe that long-term horizon is absolutely critical for businesses to function properly in a global society and have a positive benefit on society more broadly. We think that companies which are thoughtful about their impact on society will also prosper over the long term as well. Within Baillie Gifford, I work on our positive change strategy. And this is a fund that is dedicated to companies that are making a positive impact through their products and services. So we look for companies where their core business, where their innovation, their products are having a positive impact by solving social and environmental challenges like climate change or access to education or inequality. So in terms of what I heard this morning, it's really exciting. It's great to hear that here in Scotland there is this initiative to start a stock exchange which are focused on companies that have a positive impact. I think that is where the society is moving towards. I think the younger generation now are caring more and more about society more broadly. They don't just make their daily decisions based on money. They make their purchases according to companies that are really aligning with their value, and they are putting their money where their mouth is. And I think businesses which are having that positive impact embedded in their business strategy will do well in the long run. And it'd be great to have a stock exchange that can support those businesses flourish and prosper in the 21st century.
Thank you very much, Lee. Now, this is a chance you've all been waiting for, so I'd like to invite you to ask your questions now. There's a microphone there and there's a microphone here, so if you could just indicate to me if you'd like to ask a question. A gentleman there in the middle. And also there's a lady there, Elizabeth, after the gentleman. Just to your left.
Here?
Yeah. Right.
Hello, very interesting stuff. The project's obviously very well advanced. I just wonder what Tomás and the panel think the main obstacles now are to making this the big success that I'm sure everyone here hopes it will be.
Right. Tomás, I think we should take that one.
Yes. Yeah, the project is well advanced. I wouldn't waste your time inviting you to the Panelists to say that I've had this brilliant idea. We've been working on this for 2 years, and as you can hear from Qian, partners at EuroNext, the project's so well advanced that probably parts of the build will be complete during the second quarter of this year. What are the major obstacles? Well, I wouldn't say it's an obstacle, but clearly we need to be authorised and recognised by the Inland Revenue and by the Financial Conduct Authority to operate the exchange. There's a process for doing that, and we're in the process. I'd like to pick up on what Lee said and what Meg said, because the exchange to work needs to have investors like Lee and Meg, and it needs to have brokers, and there are some in the audience who can do the work of representing the company, researching the company and supporting trading against securities. It needs to have a trading venue, it needs to have clearing, it needs to have settlement. What it really needs is companies. And one of the reasons we're holding this event is to get the message out that for the rest of this year we're going to start looking for those companies that could be issuers on the first day of trading. And they need to be brilliant companies, as Meg said, otherwise Meg and Lee won't look at them. So we can't just find 12 Scottish companies. 12 is an interesting number because I was on the floor of the London Stock Exchange the day that the alternative investment market was opened. And there were 12 securities to trade that day, and none of them was raising any money. So if we had 12 securities on the first day of trading in the Scottish Stock Exchange, we would be doing just as well as the alternative investment market did in September 1995. You don't need 800, you don't need 3,000. 12 would be fine, but they need to be the right companies. They need to be companies with boards that are fully conscious of the need to demonstrate positive social and environmental impact. Otherwise, Meg and Lee won't buy them.
Well, thank you for that. And obviously, we all within this community clearly have a role within supporting that as well. It's an important point we make about how many we need to establish on the first day, and thereafter things always take care of themselves if they're the right people. Now, lady there, Elizabeth's got a question.
I was wondering about carbon trading, and whether you would look at trading carbon certificates and so forth because of your interest in climate change.
So when we launch, we're just going to be cash equities and fixed income. But yes, there's a couple of things that might come down the line in 2020, and one of them is looking at carbon trading. There's also an initiative modelled on the carbon markets to build a new bond instrument that would finance social impact models. So at the moment there's a thing called a social impact bond. Some of you may be familiar with it. The problem is it's not a bond in my terms, it's a structured product. And because it's a structured product, you can't sell it to civilians, to normal people. You know, sell it to institutions, and they're very rich. So there's another project to try and take learnings from the carbon market and create a new fixed income market with a social impact. But this time with a real bond that normal people can buy. So yes, but not on day one.
Yeah. So it's pleasing to hear the future plans as well. Not yet is what you're saying.
Yes.
Now there's a gentleman up at the back there. The next question, Anna. And if can I have another hand as well, so that we're ready to go on that. Lady at the back as well. Thank you.
Good morning. Name's Peter Lear, and first of all I'd like to congratulate Project Heather on its excellent choice of corporate colours, because mauve and black happen to be the same colours as the racing silks of my racehorse, who happens to be called Pentland Hills, the range of hills just to the south of Edinburgh, and who, fingers crossed, will be running in the Group 1 Triumph Hurdle Cheltenham Festival next Friday. If you want a good each way bet, have it. But my real question is, clearly one of the critical factors that's already been mentioned to the success of the Scottish Stock Exchange is to encourage and actually get a lot of the right companies to list on the exchange. Would each of you like to elaborate a bit more about what you see as the desirable type of profile for such companies, so that perhaps those of us connected in business might indeed encourage our networks to actually consider that?
Lee, would you like to take this one to start off? Lee.
That's good. So in terms of the type of companies we look for, when it comes to analysing the social and environmental impact, what we look for is that there is a management team which are really committed to have a positive impact over the long term. They are managing their business for the long-term interest of the wide stakeholder base, not just in terms of making profit, but also in terms of treating the employees well, in terms of managing relationship with the suppliers, the customers, the local community and the environment. So there must be that intent to have really good business practice and treatment of stakeholder. I think that is fundamental. And then the second one is that we look for businesses where their core products and services are having a positive impact, and where they are contributing towards solving a particular social or environmental challenge. Now, understand that it doesn't mean that the company will have a magic bullet to solving climate change. It would be great if they have that, but that's probably not realistic. But even a product that can make a small contribution towards a big challenge, that is still viewed positively. So I think a long-term commitment and also where the products and services are well aligned towards making the world a better place.
How about you, Meg?
Yeah, quite a lot of similarity actually, which I hope helps you find companies if the investors talk the same language. So we're looking for companies where the business model, the financial returns are really coming from revenue generated by selling a service or a product which has a solution to an environmental or social problem. So waste management companies, where the more we seek to reduce and recycle our waste, they will benefit in terms of their revenue generation, and we as investors in them will therefore benefit by holding the shares. Similarly, we invest in companies in some of our funds who have innovative diagnostic tools for healthcare to make healthcare really personalised and reduce the use of unneeded drugs on populations. So that is a technology which we see a great future for. It really deals with the social needs, but it's actually something which is breaking through and helping save health services money, and that we think that's got a great growth potential long term. So that's the kind of company we're looking for, the ones that are making money out of a social environmental product or service. Once we've identified those, we're looking for profitable ones that are well governed and liquid, and we also would like, but don't require, reporting on their environmental or social contribution. If they do report it, we work with them to identify what we think it is, and we debate that with them so that we can publish portfolio level impact to our clients. So I think a lot of the stock exchanges where the companies that we invest in are listed today are required to report a lot of negative information about their climate change impacts, their labour supply chains, anti-slavery laws, all that kind of thing. There aren't exchanges that are requiring positive reporting. We'd love that. We look for it anyway. If a company doesn't do that, we will work with them to help us understand it. But essentially, if their revenue, if their business model is in an environmental product or service, they are having a social or environmental benefit, so it should be possible to measure it. And we're really happy to work with companies to do that.
And obviously, Tomás, I'm going to bring you in here, and I think that it would be useful for the audience to understand a bit more about your intentions in terms of the higher bar, in terms of impact focus, and also bringing it back to Scotland. You touched in your presentation about this sort of framework. I think you alluded to the National Performance Framework, and then they're on to the SDGs, so it'd be useful to get a perspective in both of those areas from you.
Okay, how much time do we have?
Fine.
A good place to start is this. There's one on every seat. If you look at the top right, the impact process, then you can see a schematic setting out the steps that we would require of a board to do what Meg wants, which is to see a company reporting positive and purposeful social impact achieved in the course of its business operations. So consciousness is a word I've used quite a lot. 21st century boards, 21st century governance requires different things in boards from what went before. You know, I've sat on a board where the only job that really had to get done was the filing of the annual accounts. We need boards now to be fully conscious of the impact that the business has in society, and a fully conscious board will be able to say that it runs its business purposefully to achieve positive social impact for a targeted or identified beneficiary group, not just saving the planet or being nice to people, but targeted beneficiary group, in a way that it measures, just as it measures its inputs, just as it monitors its supply chain, just as it measures its financial performance, and can report publicly annually. So in a way, it's saying this document should sit next to the audited accounts, so that an investor can see, yes, the source and application of funds, the balance sheet, the profit and loss account. The investor can also see what's happening with what are so-called non-financial outcomes. Now, I don't really believe they're non-financial outcomes. I think all outcomes are financial in the end. That's what risk management is. But at the moment, we call them non-financial outcomes, things like social and environmental performance. And that's what the impact report will do, and it'll be a requirement for listing. Now, does that mean that certain industrial sectors wouldn't be able to use the exchange? And the answer's probably yes, but they're probably the sectors that you would expect not to be able to do that. And I've been asked this when I've been on the road presenting the project. It's very unlikely that the vast negative effects of pornography could ever be outweighed by any other ancillary or purposeful measure that company, that publisher, undertook. So I don't think you can expect to see businesses like that. Gambling is another one where the vast negative consequences of gambling on society are highly unlikely to be outweighed by anything other good that the company does. So we're not building a stock exchange for pornographers and gambling and gaming companies. Shock horror. We want companies that of course need to raise capital, so they need to be capital intensive industries. There are a lot of extremely good, very worthy businesses out there that don't need to raise capital. Stock exchange is not for them. It's very important that the company should understand that the stock exchange will not require you to be a £1 billion company at inception. We have this ridiculous misconception now that you need to be worth £1 billion or 10 billion, a unicorn, in order to use a public market. It's ridiculous. When I started out as a stockbroker, it was perfectly possible for a company with a market cap of 30 million or 50 million to be a public company. And the company grew on the public market, which meant that normal people, civilians, rather than financial professionals, were able to invest in the shares and hold the shares while the company was growing. That's what we need to get back to. That's what the Scottish Stock Exchange is going to do. I'm not interested in running a market where somebody like Uber has the benefit, or the private equity owners have the benefit of all of the years of growth, and then the thing goes ex-growth, or the private equity owners want to get their capital back, and all of a sudden it floats. So I don't have the concept of an exit. We want companies that are going to grow on a public market. And then finally, Michelle, you asked about SDGs. So when you start thinking about this, you think that, unlike audit process, there aren't public statements of standard accounting principles or GAAP for impact, but increasingly there are. And two of the most popular and well understood frameworks are keyed to the Sustainable Development Goals, which is what this is. So they're keyed to a established reporting model that is recognised internationally. Now, it's not quite the same thing as generally accepted accounting practice, but it's going to get there over the next few years, and that means that these reports will be broadly comparable across countries and across industrial sectors, which will be helpful for investors, and that's why we're key to the SDGs.
Thank you. Now, there's a lady actually in the back row. Yeah, Anna's got back.
Yeah.
Thank you.
Thank you. A question for Tomás. In terms of listing requirements, will there be a consistent and standard framework for positive impact assessment? For example, the B Corp seal of approval.
Yes, so there are multiple. I said before, there are multiple frameworks, and B impact assessment is one, which I'm very familiar with.
Will the exchange pursue these types of measures as well in itself?
I think it would be brilliant if we applied to become a B Corp in our own right, yes. And I'm familiar with the model.
Thank you.
Okay, thank you. And there was a gentleman there, and then Chapman Blue Switch after him as well.
Jim Reid. For companies and boards considering listing at the moment, for example in London, what would you say to them to hold off in their decision processes?
That's a great question. I want to be clear that this initiative is additive to and complementary to the existing capital markets framework. So I'm not trying to take the Royal Bank or Wood Group off the London Stock Exchange. We want to be additive and complementary. That said, I think if there's a Scottish company that's intending to list right now, then I would like to go and meet their chairman and their chief executive and their finance director tomorrow.
And of course we did have a quote in the background research which was floating about earlier with Sandy Adam, who recently floated Springfield Properties on AIM, there's a quote, and I'm paraphrasing along the lines of, had there been a Scottish Stock Exchange, that's something he would have given serious consideration to. So there's a couple of gentlemen, they're chatting blue sweatshirt.
Hello, I'm on the committee of the Student Managed Investment Fund at Stirling University. And just to go over what you were saying about, you would like the companies listed on the exchange to be, potentially have a market cap of 30 to 50 million. So you're not looking at big conglomerates. You want people to have access to invest in local companies. So I was just wondering really, what would for you be like, would there be a lower limit on market cap or like a lower limit in terms of the revenues that the company was making before it would qualify as being listed on the exchange, or is it essentially any Scottish business that wants to expand can list?
So there wouldn't be an explicit revenue target, no, but I mean, in my experience as a stockbroker, the thing that makes a company able to be a public company often isn't its size or its turnover, it's its governance. You shouldn't be a public company unless you can produce financial projections that are likely to be achieved. And you shouldn't be a public company unless you've got an effective board. So it's not just the money bit, it's the governance bit. And often you can have a great company which for governance reasons will not suit a public market. But there isn't going to be an explicit revenue target.
Thanks very much.
Gentleman here at the front.
Hello, yes. And Colin, so everyone in the room here, I'm sure, wants this to be a massive success. So just going back to the point about having companies for the market on day one in Q4, are those going to be, these are going to be, and you said, I think that you already are speaking to companies. So these are companies that are quoted in other exchanges that you want to attract to this exchange. Is that right? Or are you looking at companies that are still to list and go both?
So
but on day one, it's got to probably be companies that are already listed and therefore have to be attracted to this exchange.
What would be ideal? So I can tell you what I think would be ideal on the first day of trading on the Scottish Stock Exchange. we would have at least one fixed income issue. We would have at least one closed-ended fund, one investment trust. And they're probably already listed. We will permit dual listing for securities that are tradable outside the United Kingdom. So again, we're not trying to compete with the stock exchange, we're additive, we're complementary. So I'm not going to have dual listing from the LSE. But if a company is listed on NASDAQ in Stockholm or in New York, then they could perfectly well dual list. And then finally, of course, this doesn't work. My own theory of change doesn't work unless we actually provide access to capital for Scottish industry. So yes, we would like some companies to come to market and be raising money.
Just picking up on that, when we've talked previously, we've talked about not just only companies based within Scotland or UK, but elsewhere, because attracted by the higher bar of impact. Have you had conversations with companies out with Scotland or the UK as well?
Yes, I can't name names because it's not fair to boards and advisors, but we've had 2 approaches from Australia, we've had 1 approach from South Africa, we've had 2 approaches from Scandinavia. Scandinavian pension funds are way ahead on impact and environmental risk anyway, so that's not a surprise. And we've had 1 from Canada, which is a marijuana company, not sure, and we've had 2 from the United States.
Okay, thank you. Now, there's a question, 2 gentlemen over here, and then I'm going to ask for a lady after that, and I'm going to pick on somebody. I don't know who it is if I don't get a lady after that.
Hi, I'm Simon Francis. I work for a social enterprise that helps organisations with their marketing. So my question is, how can social enterprises be involved? Perhaps not as listing, because obviously many of them are very small or invest all their profits back into a social purpose directly, but perhaps in supply chains in order to help meet the impact criteria. What role do you see for social enterprises with Project Heaven?
I think there's at least 3. I mean, community energy schemes and a lot of social enterprises can issue fixed income instruments. So whilst they've got a lock on their profits, they can't dividend them out, and they can't sell shares. They can raise bonds, and the proceeds of the bonds can be used to finance their objectives. And I would love to help with that. I'm a big fan of the Social Value Act. So we would very much want to encourage social enterprises to be in our supply chain as an exchange, and encourage companies listed on the markets to be using social enterprises in their supply chain. And thirdly, I think that some of the amazing social enterprises I've met on my travels are exemplars of the sort of purposeful businesses we want to see. So I think that they would act as references for boards of directors who want to know what a social purposeful business looks like.
Good morning, everybody. Excuse me. David Hood from the Edinburgh Institute. Well done, Tomás and the team. This is a fantastic enterprise, and especially well done to Michelle and Roger for the report, which was incredible. I'm really looking forward to developments. I guess my question is for Qian, perhaps, I think, is that we've talked about how this exchange will differentiate itself from other exchanges. From your perspective, over the small amount of water between the UK and Europe, how do you see the stock exchange being differentiated in Scotland compared to other stock exchanges?
Well, that's a bit difficult to say prior to go live. I think from a way we don't see that different. It is regulated, so there's a lot of more MTFs being regulated by the UK, operated via Euronext technologies connecting to EuroCCP. So we have had experience with previous MTFs and exchanges which needed to have a startup, and whereby there will be small listings coming in over time, and that it will be slightly growing. So that's the difference. That a lot of maybe that's the biggest difference. A lot of the exchanges are just secondary listings of many primary listings. And here the aim is to have a lot of primary listings, and we start with as the primary listing of new IPOs, new companies. So I think that's the big difference, and that is what the community should appreciate as well. That it's not just another MTF, but a new exchange with a new idea, with new views and new goals.
Thank you, sir. Oh, right. I won't come to you, sir.
Hi, I'm Natalie Novick, and I don't have a racehorse. So I'm looking at how you evaluate the impact process for the companies that you hope to invite to the exchange. What are some of the beneficiaries or groups that you are really keen to identify, because you said that have a measurable impact for them? You said marijuana company, probably not. Gambling company, no way. What are some of the groups that you're really keen to be benefiting with these companies' business models? And secondly, who is going to be in this independent impact panel that does the evaluations? Have you developed that panel yet, and who are you looking for to be included?
Okay, so I'm not saying no to the marijuana company just yet. The promoter of the marijuana company says that he can convince me that marijuana has hugely positive social consequences. Probably because everyone is blissed out. The ambitions panel hasn't been constituted yet, but we're clear what the objective of it is. We want the ambitions panel certainly to be gender balanced, and we want it to represent different industrial sectors, not just to be management consultants, not all management consultants, but not all management consultants. So we need to find the right people to do that, and they need to be people who can speak with authority and judge with authority on the question of whether or not an issue has achieved a positive impact or not. Now, that actually narrows the field quite significantly, but there are some great initiatives happening in Edinburgh and elsewhere in Scotland, focusing on things like total stakeholder value, on impact analysis, on the mature corporation, and I think we can take advantage of that and connect with those initiatives as well. And how are we going to measure it? Well, as I said, there are quite a lot of frameworks in place already. I think there was a sort of race in 2010-14 to try and create a monopolistic impact reporting evaluation model, and fortunately for everyone that failed. So the impact panel will be able to decide which metrics it thinks are the most relevant. So metrics that you would use to do baseline analysis of an individual in Namibia will be different from trying to assess food poverty in Falkirk or Glasgow. And the metrics for assessing gender equality are different again. So I don't think there's one standard model. I think we look at individual challenges that are being addressed by the business model and try and find the best metrics to evaluate whether or not the company's intervention is likely to be successful. And on that, I should probably hand over to Meg and Lee, who do this for a living.
Yeah, I know. Meg, perhaps you'd like to go first. I was going to bring you both in anyway in terms of your company perspectives, particularly at a global level, some of the themes that are emerging. I'd be interested in your views.
Yeah, so just as I said, we look for evidence on environmental impact which relates to the reason we bought the company, which is because of its environmental product, right? So we want to see the company growing, so we want evidence that that product is really delivering good environmental performance. So if we invest in a company that makes insulation, we look at the energy saved once you've put the insulation in the wall, and look at the carbon dioxide abated, let's say for 1 year, of using that insulation in a typical building versus the CO2 emitted during its production and installation. So we're netting off what is emitted by the production process and saved by the product, which is the ultimate reason why someone would buy the product. And if that isn't carbon abatement, then the insulation, the concept of using insulation in housing would not perpetuate, and that would be a bad investment. Does that make sense? So we're trying to link the environmental metrics to the reason why we bought the company. So I agree with Thomas. I don't think you can standardise this wholly globally, much as it would be nicer for our spreadsheets to have standard columns and numbers that we could compare. It's about understanding the reason why you bought the company, the reason why that company will grow, and measuring something which is an indicator to you that is supported. Your thesis is going to be right.
Global perspective.
Yeah, so we invest across the world in different sectors, and we find there's no uniform way in which to measure a company's impact on society. So the positive impact of a renewable energy company saving CO2, for example, will be very different to a healthcare company that is saving people's life. There is no single metric that you can use for both companies and then compare them. So for us, we want to see information and data that is relevant to the business. So if it's a renewable energy company, we want to see things that's related to the business activity in renewable energy. We're probably less interested if that company donated some money to a local school and that's helping education. That's not relevant to why we invest in that business. And then we look for information that is material as well. So that is actually a significant part of the business, the impact that's generated by the core business activity. So that's two things that we think are important to take into consideration when reporting impact. And then the final thing is that not all impact can be quantified as well. There's a great temptation to produce a concise number saying, look, isn't it amazing that we saved 5 million tons of CO2 this year? But sometimes the most powerful impact cannot be summarized by a number. A good example of that is we invested in a company called Illumina, which makes genetic sequencing machines. Now Illumina has managed to reduce the cost of sequencing a human genome from $100 million less than 20 years ago to less than $1,000 today. So that's a huge decrease in the cost of gene sequencing. And that in the process has allowed scientists to have a better understanding of many genetic diseases like cancer, cardiovascular diseases, and coming up with new treatments and cures for those diseases. Now there is no number that can summarize the impact of Illumina and the innovation that it has brought about, but it's tremendous, it's huge. But we can make a judgment on that impact through more qualitative analysis and information. So there's also a role for qualitative description when it comes to reporting impact as well.
Thank you.
Hi, sorry, I didn't realise you had to state what sort of pets you had. I have a dog. So what was it for asking the question? For long enough, there's been an imbalance between the economic aspects and the environment, social aspects, and sustainable development, tripartite relationship. To what extent do you see the stock exchange as a driver for positive environmental and social change?
Yes, I mean, I said earlier that I have my own theory of change, and I think the lady asked whether or not we ourselves would be interested in something like B Corp certification. So the answer is yes, I absolutely have my own theory of change for the establishment of this new Scottish institution, and I believe it shouldn't be neutral, it should be a driver of positive social environmental change, and by creating a new institution, hopefully you do drive or pull the businesses and the ecosystem that you're developing towards being able to be purposeful and achieve impact.
There's actually a new reflection as well. Both of you.
Thank you. Jo Pike from the Scottish Wildlife Trust. I'm involved in a new project called the Scottish Conservation Finance Project, and we've recently launched something called the £1 Billion Challenge. So my question is to do with green bonds. You mentioned, more specifically to do with how you combine innovation and risk. So obviously what you're doing here is really pioneering, really innovative, but by definition, the risks have to be incredibly well managed in order to attract investors. So we've seen a huge growth over the last few years in green bonds, but we know that the vast majority of that investment is going into renewables and extremely important areas such as that. What my question is about is whether you've looked at the development of the next stage of green bonds, taking it beyond climate finance and looking at our other huge global environmental challenge, which is biodiversity loss, and looking at green conservation bonds, which would look at nature-based solutions to some of our biggest challenges. So it's something that we're actively looking at the moment, and I just wondered whether that's something you had any thoughts about.
Yes. So I think when I answered your question earlier, I said not on day one, but one of the things that we're very interested in being able to bring forward next year would be a market that would focus on new fixed income issuance, where the proceeds of the capital raised would be applied to things like biodiversity loss. And there's an interesting group of people who are working on what that instrument would look like and making it into a proper bond so that it could be offered to the general public by way of a prospectus. And that's really important because if you try and do this kind of innovation using things like social impact bonds or just private equity, then it's entirely undemocratic. You're creating a structure where only the very rich can play, and I think that's discreditable. If we're going to do this properly, we need to have a public market which everyone can participate in. And the other thing that's a problem with green bonds is that there's no standardised agreement on how the proceeds should be applied. I mean, there was a case of a green bond issued by, I think it was in Taiwan, in which it was some of the proceeds were being used to build a new refinery. So we need to, part of what an exchange can do is to promulgate standards which the bond issuer has to accept. And our standards will not allow you to raise something, put a green label on it, and then use the proceeds in the wrong way.
Thanks.
Yes, sorry. No, thank you.
For us, we run fixed income products as well, and we haven't been able to have a whole strategy dedicated to what you could call label green or social bonds, because the market is so shallow and a lot of them are a bit odd, and they're very much driven by the desire of a corporate often to be the first to issue a green bond in their sector. So you end up with a very weird universe for a portfolio manager to choose from. So from our perspective, we just this week sort of did a direct deal with the World Bank, who issued a bond for education of girls in developing markets, and we can see where the money's going. We can see a distinct project. It's got nothing to do with climate change, but it's very well governed and traceable as to what's going to happen to that money. You're looking at the use of proceeds, not necessarily the issuer, and to have that kind of access to that kind of bond would be really, really helpful in broadening and deepening the green or social bond market, whether or not it had an official label. And we can look at that, we can do that research. And on this exchange, obviously that will be part of the process, but there aren't enough of those things for the demand. And the portfolio managers would love more of them. So we'd like to see that it's not all about new startup companies raising new capital.
Hi, Tara Schmidt from ERM. I work on the G20 Financial Stability Board's task force on climate-related financial disclosures and implementing that for financial institutions. I may also be, I don't know how many Americans are in the room, but I take your point, Thomas, earlier about in the US, the view of looking at green and the financial returns and how those are separate really into the private equity markets versus here. We've talked a lot today about impact in terms of environmental and social impact, but I'm curious within your impact assessment if you'll also consider the impact of the environment on the companies that you'll be listing. If you think about the TCFD, what they're looking at is how climate change potentially could impact in terms of financial risks and opportunities for companies. And certainly I would think some of the companies that you will be listing would have a significant upside when you're looking at a 2 degree or 1.5 degree scenario and what it means for Scotland's transition strategy. Wondering if you have any thoughts on that.
Tons of thoughts. I mean, yes, of course. I mean, at a different level of financial sophistication, a lot of companies have to think about how their perimeter changes in a 2 degree centigrade world or worse. I was at Marlborough House speaking to the Secretary General of the Commonwealth, and she said, there are 3 Commonwealth states that cease to exist if we don't control and halt climate change in that way. So yes, of course it's relevant. I mean, there are quite large Lloyd's underwriters looking at how they insure and reinsure companies on the basis of whether or not the board has a conscious, intelligent assessment of its climate risk. It changes resource allocation. It changes geographies where companies can operate. So yeah, absolutely. And hopefully, again, the creation of exchange can make some of that more explicit. But I admire the work of TCFD, so thank you for coming.
Hi, can you hear me?
Thank you.
The conversation's moved on a little bit throughout the course of the questions, but I sort of into the area where I was trying to ask earlier on, but is there a risk of, my question is whether or not you have a criteria for a spread of different types of social environmental impact being listed on the exchange in terms of if a certain type of social environmental impact is most successful at getting listed on the exchange, is there a risk of directing innovation towards that particular niche and away from other issues within the sustainable development goals or otherwise?
And certainly investment bankers like repeatable transactions. So they've got this social housing offer away, let's go and do another social housing offer because we've got all the documentation now. So there's always a risk in the financial markets that's what goes on. But I think that the exchange can address it by giving equal intelligence and equally elevated profile to issuers in different industrial sectors and different segments. We don't want to be just an exchange for one thing. Honourable and worthy as social housing is, very important in Scotland. We would like to assist with raising money to provide social housing. It's not the only thing we want to do.
Thanks. I'm an advisor for the new stock exchange as well, so I'm fairly familiar with the model we're building. And I thought it'd be a good opportunity perhaps to us to talk about what opportunities you think the exchange offers in working with public bodies, in, say, the regional growth deals or the Scottish Investment Bank, the Scottish National Investment Bank, how that can dovetail with other public initiatives.
Yes, well, public commissioners are obliged under the Social Value Act to take into account when they tender a project the positive or negative social and environmental impact of the body which is tendering. So as well as having to be fair in the process, urgent process, they also have to take into account the positive impact of the body which is tendering for service. So that would be relevant if you're contracting with the National Health Service, it would be relevant if you're contracting with a city council or another local authority, and of course it's highly relevant in the context of the city deals. Lord Provost mentioned Edinburgh City deal, the Tay City deal was recently announced. All of those city deals are designed as a stool with three legs. Central government in Westminster providing a budget, the local government in Edinburgh or Tayside providing another budget, and the third part is supposed to be the private sector. The private sector is supposed to be able to raise money in order to achieve objectives set in the city deal. But there's no platform in Scotland to do that, so yes, I think we can be incredibly relevant to any of those public bodies. And of course the impact reporting process gives those bodies, if they are going to tender to the National Health Service, a conformed, approved, standard document that they can include.
And I suppose that touches then, obviously we've got the kind of professional groupings here, but kind of people in the general public, what does this mean for me and what the benefits might mean for me in terms of my pension schemes, which often there's an increasing tension there when people are unhappy. I'm imagining that there's some thinking that we might be able to link in something we've talked about. You touched on municipal bonds earlier. Can you add some thoughts about what it might mean for ordinary people as well?
Yes, it's very, the whole purpose of creating a stock exchange is to create what's called a public market. Rather than the private market, we want issuers to use a public market to raise capital, because if it's a public market, then you're all members of the public, although there are probably quite a lot of financial professionals in this audience, but we want to be able to ensure that normal people, civilians, not just financial professionals, can support these companies and make decisions with their savings and with their pensions to back companies which are purposeful and sustainable. And I think Meg said something very interesting there about fixed income issues. There's a demand for it out there. There aren't enough people supplying securities of this kind for portfolio managers to buy. It's not just portfolio managers. I am very conscious of the shares I own and of where I bank. And I think that's a strong connection to a movement that started with things like fair trade tea and fair trade coffee. We educated ourselves to be more intelligent consumers, and now we need to educate ourselves to be more intelligent investors. When you go to a normal person and you say, do you invest consistent with your values and with your philosophy of life? Are you interested in social justice, in the context of the board of a company that you have shares of? Pretty much 100% of people say, yes, I am. They just don't have a platform for achieving those objectives. So let's create one.
Lee, I think you probably want to add to this from a really different perspective.
Yeah, so we think that one of the greatest benefits of a public market is that everyone can participate. And we have been, we run a series of very popular investment trusts in the UK as well, and that is mainly open for retail clients who can invest their pension into those investment trusts. Using their own money to support businesses driving a more sustainable change. It means that as a consumer, I'm not just having an impact by deciding to buy a fair trade banana and recycle my rubbish at the end of the day, but also the investments, my future retirement pension, those will have a positive impact, and that could be extremely powerful.
The lady here for a question. And also, can I invite some of our professional services that are here? I know that there's quite a few lawyers in the room, and I'm sure that they've got some questions as well, because the statement that Tomás made at the beginning about the return of some of the services that we previously could have provided, I'm sure there must be some questions there, but Matilda, to you.
Yeah, thank you very much. It's really interesting. So I just want to build up on everything you just said. What always strikes me is the fact that what you're doing is a very small part of what's happening in the world, and everything should be like this, really. So I was wondering, how do you see yourself leading the change in the future about sustainable investment, and how do you see yourself making this bigger and making this mainstream, rather than just being rather niche, if you know what I mean? Because eventually we're going to have to think like this 100%. So yeah, how do you see it? All of you, this is an open question.
Gosh, well, I think, yes, we want to take over the world, and we want everyone to invest their money in a meaningful way, which doesn't leave a legacy, that we don't want. Leaves a positive legacy, not a negative one. But I guess, Impax and my own career is 20 years old, and I have always done something that I really enjoy and I find meaningful. I work hard at it, and over that 20 years, not all of it with Impax, but we've got our birthday party next week, so we're sort of talking about the 20-year thing. I would never have expected to have got this far. Right? So my job at Impax is to create product that works, that delivers what the investor, the pension fund, or the individual wants. They want growth and they want income, and they don't want to lose their money on things that sounds like a good idea but turn out not to be. And I think at Impax, and before when I was in more mainstream world as an environmentalist, we're looking for stuff that actually makes money and actually works and actually does what the end investor needs. And if that works, it will grow. It is working, it is growing at quite a momentous rate. And investors, so our competitors that are not changing their products and not changing what they're offering to pension funds are losing business, and the money is coming to us. So I'm incredibly optimistic. If it carries on at this exponential speed, I think it will be exhausted, to be honest. But it's incredibly exciting. So be optimistic and go for it. $1 trillion sounds like a lot of money, but the growth rate is very, very fast. But the products have to work. They're financial products that have to work.
Yeah, I completely share Meg's enthusiasm and optimism, and I think that with the right work, hard work, it can be achieved. I think for us, when we speak to some clients, there is still this skepticism that if you want to do good for the world, then you have to sacrifice investment return. It means installing a new technology in the factory that reduces pollution. That is a cost. It means less profit this year. We try to show that it's not the case, that with a long-term horizon, doing good means doing well financially, and you can have achieve both of that objective. And then if we can demonstrate that, it becomes a no-brainer. Why would you not invest in the impact fund, which are doing well financially and have all these ancillary benefits of having a positive impact on society, so that you can attract more clients that are aligned to those values. So we are optimistic that if we do our job correctly, then more investment will flow into this area, and this will become a mainstream way of investing.
Well, I think we probably need to bring things to a close, so I would just like to say a few thanks, first of all, to all of you for attending this morning in what's really not a terribly pleasant day. We braved the weather, so everyone arrived in taxis looking thoroughly wet. If you want to speak to any of the members of the team, they will be hanging around afterwards, either in here or next door in the coffee room, and everyone's wearing the kind of wee sprig of heather, as Roger said at the end there. I'm very excited about this project from a personal perspective. We've talked a great deal today about impact focus, but the global facing and Scottish based is absolutely fantastic as well. Wouldn't it just be marvellous if Scotland could play its part in leading the way with all these benefits to every section of our society, to the economy, and really drive positive change, would be absolutely marvellous. So thank you very much, everybody, for coming today. If you need to get in touch with anybody, the team, it's very easy to track them down, whether it's in the LinkedIn group, whether it's on Twitter, and you'll see the contact details on the back of these little booklets. There's plenty of other information if you want to come back with more questions as well. So thank you very much for everybody. Thank you, Tom.